Happy Friday, all my stock market investors. It is ShPena, and I'm back again with another Cashapp investing video. And today we're going to be talking about two biggest daily movers. Should they be on your watch list or should they not? But before we get there, make sure you hit the thumbs up on this video. It puts a nice little smile on my face. And I know y'all like to see my teeth. So let's get right into it. Capital One recently rose 9.6% based off some recent data that was reported by MasterCard that showed consumer spending may have been improving significantly. Back on April 14th, it was down 26%, and recently on May 7th, the new report showed that it was only down 6%. I need a little bit more details on this. Consumer spending is going up, but business isn't back to usual. It's a little confusing to me. It either means to me that people are spending money they don't have on credit cards, or people are just bored and just spending money because nothing really is back to normal. I know that there's parts of the country that are back to normal, but nothing is really back to normal. So I feel like I need more research or more details on this consumer spending going up. But let's look into some details on this stock. As I make this video, they are currently trading at $59.16 with a 52-week low of $38 and a 52-week high of $107.59. They were able to bring in a positive net income of $2.7 million. They were able to bring in revenue last trailing 12 months $18 billion and have a total debt of $58 billion. Sounds pretty hefty, but it's financial, so it's very understanding. Somehow, Avis budget car was able to beat its Q1 earnings and revenue estimates. Now, as I make this video, I don't know if Avis had brought down their earnings or estimates, but I just don't understand this. Avis seen a rise of 10%. They had recently beat their earnings and revenue estimates. How? I don't know. It doesn't really make sense to me because, to my knowledge, the rental car companies are attached to the hip of the travel industry. So if the travel industry is doing good, rental car industry is also doing good. Right now, the travel industry is non-existent. So in my head, the rental car industry would be non-existent in some way, shape, or form because, and this is like a big pool too, because the rental cars and companies, they buy new cars, they sell used cars. So this industry is at a standstill right now, and I'm very afraid of the rental car industry. I feel like it was getting a little too big, and if you look some of the reports, some research, they're parking a lot of these cars in parking lots. They're filling up parking lots with rental cars because no one is out. No one is out traveling to rent them. No one needs them. Everybody's home. So how this stock is rising right now is beyond me. But let's look into some details. As I make this video, they are currently trading at $11.90, very affordable, with a 52-week low of $6.35 and a 52-week high of $52.98. Their last trailing 12 months, they were able to bring in a positive net income of $235,000. That will not last them through this pandemic, recession, depression, whatever you want to call it. They have a total debt of $18 billion and were able to bring in a revenue the last trailing 12 months of $9 billion. I mean, their debt isn't out of this world, but I just don't see how they can pay their debt down if the travel industry is being negatively affected. I don't know. This one's a tough one. Not really a tough one for me. If I had to pick between both companies, I think I would honestly lean more on the financials because the car industry is one of the next to go down. It's going to either be the car industry or it could be the housing industry or housing bubble. It could be the car bubble. Could be a few, but I'd rather be on the side of the financials because financials have always been backed by the federal government. So why not take the safe bet on this one? Let me know in the comments, which would you rather invest in? Would you rather invest in Avis? It's a little bit more affordable. Or would you rather invest in a little bit more of a safer bet with Capital One. Let me know in the comments. Make sure you hit the thumbs up on this video. I love y'all for watching. Thank you, thank you, thank you. Have a great rest of y'all weekend.